I think good morning, Cheryl. Today's market has been very strong. I think if you ask me how should an investor protect his capital, I think first of all, I think if the market is volatile and if the investor is not willing to, be a part of this volatility, then it's better to go and opt the mutual fund route. I think that's a much safer way where volatility is much lesser. But if the investor wants to invest directly in equities, then I think he should stick to the large cap companies, especially the Nifty or the Sensex companies, because I think in this market, the large cap companies will offer a better protection in terms of margin of safety, in terms of the price appreciation. And most importantly, whenever they want to buy, it's always better to buy via the SIP kind of method rather than buying in lump sum. I think the markets will offer a lot of entry points, both on the downside and on the upside. But I think most importantly, they should have the patience and the conviction to stay invested for the longer term. So I think, all said and done, equity will provide decent returns, but they will come with volatility. So this is something which all retail investors should keep in mind, that the opportunity to make wealth is huge, but you need to take volatility on your stride. Yeah, I think Carol, Infosys is definitely a good, buy even at the current level. The kind of commentary, the kind of order book which the company presented post the Q2 numbers have been very encouraging. The company has also announced a buyback at around 1800 plus rupees, but that is going to be an open market buyback. So that doesn't directly, benefit the, retail investor. But I feel that looking at the kind of tailwinds and the kind of opportunity which the company has mentioned, in fact, the revenue growth guidance has been increased, margins have been more or less been maintained at 21-22%. So I think he can definitely do an SIP here, provided he's got a horizon of at least 2 to 3 years. Normally SIPs don't work out for a very short time frame, but definitely he can do the SIP for a period of 2 to 3 years. As far as KPIT is concerned, this is one of those companies which has got a very large exposure on the electric vehicle space and has a large market in US and Europe. My sense is that he can average this company here also, because the opportunity for growth is very solid. They are sitting on a very healthy order book, and I think going forward, electric vehicles is going to be the future. So definitely here also I think there is a good opportunity to accumulate. As far as the third IT company which I think he should accumulate, according to me, is TCS. I think TCS is one of the larger IT companies. It's come down at pretty attractive levels, and I think looking at the kind of balance sheet strength, the kind of order book, TCS can also give him a decent return, provided he's got a 12 to 18 month kind of time.
Right. Good morning, Avinash. Adira joining in. This one's for you. Nageshwar is writing to us from Hyderabad. He's holding 1,304 stocks of NMDC at 136. He's holding them for the last 10 years. He's asking whether it's good to hold, exit before the demerger date.
See, I think my guess is that NMDC is a company where it's got a complete kind of dominance in the iron ore market, and as far as the balance sheet capital structure is concerned, that too is quite favorable. The demerger is definitely going to be a near-term trigger for the stock, because you get one free share of the steel company for every one share held in the existing NMDC share. My sense is that he should not sell the shares before the demerger. He should take the benefit of the demerger, because in all probability the steel company will also trade at a reasonable valuation, and obviously that could add a little more value to his overall stock price. But I think he has a very large quantity and he's been holding it for the last 10 years. So I think in that perspective, I think he should definitely consider booking out some profits once possibly the demerger happens, which will be happening in the next, say, 3 to 6 months. So that could be a better way to get some return on his capital, which is pretty old, and hold on to the rest of the shares. Yeah, I think for Reliance, most importantly, the 5G rollout is very important. I think possibly in December, the management has stated that 5G rollout will happen on a national India basis. So I think that is the near-term trigger. And as far as the near-term triggers would obviously be the kind of growth in the telecom business, especially as far as 5G is concerned. Obviously, the retail business is also growing very well. In all probability, over the next, say, 12 to 18 months, there are possibilities that the retail business could possibly see a kind of unlocking from the main parent company. So these could be the near-term triggers, but I think telecom and the retail business is going to be the near growth opportunity. I think the oil and gas business is going to be a steady cash cow. So nothing great is going to happen there. And I think the investor should at least take a time frame of at least 12 to 18 months here, because I feel that the stock is consolidating. and hopefully I think for FY23 and 24 the markets could see better earnings growth compared to what the street expects. So that could lead to a significant amount of re-rating. So continue to hold on, but keep a time frame of at least 12 to 18 months. See, I think Enka is largely into nylon filament yarn and nylon tire cord, and both these products are doing pretty well. The company is also showing a decent kind of performance, very little debt on the balance sheet. So I think if the investor wants to accumulate this stock, I think he can do it at the current odd levels. Over the next say 1 to 2 years, he could definitely expect a very decent risk reward. My sense is I think an upside of at least 20 to 25% over the next say 12 to 18 months is possible. So he can accumulate at the current level.
Right. Ravi Teja is writing to us from Hyderabad. He's entered VBL at 1072, looking for about 5 to 10% profit. He's asking what can be the target price to be achieved. Avinash?
Which company is this?
VBL.
Which is basically Varun Beverages?
Right, Varun Beverages.
See, I think clearly, I think to give a 10% target, as of today would be a little difficult. But I think if the stock can be held on for a slightly longer time frame, then I think this is one of the front leaders in the beverage market. They have the sole, franchisee of Pepsi. And I think despite the fact that, the stock is currently, little range bound and may see a little bit of correction, if the investor can hold it for the next 3 to 6 months, then I think you could expect very strong numbers, because the management has said that, volumes on ground have improved significantly, and that could get obviously, reflected into better earnings numbers, at least for the September and for the December quarter. So typically, I think one can take a 3 to 6 month horizon and then expect at least maybe a 10 or 12% up move. But this is definitely a long-term stock, so I think one should not try to trade in this stock at these levels. I think Coforge also definitely has a decent kind of earnings trajectory, and our sense is that if the investor has got a 12 to 18 month horizon, then definitely Coforge can be accumulated. But I think my sense is that TCS would present a better kind of a risk reward at the current odd level. So I think considering the choice between both the two, I would prefer he can accumulate TCS, again keeping a 12 to 18 month time frame where the risk reward could definitely be much better than Coforge.
Right, Gopi is writing to us from Chittor. Hi Gopi, he writes to us pretty often. He's holding Motherson with 35% loss. He's asking whether it's a good time to sell or hold. Avinash, you want to take that?
Yeah, I think from a longer term perspective, I think this company has the potential to bounce back, and I think near term correction should be used by the investor to actually accumulate further. We believe that over the longer term, this business has a very strong future. The business model is sustainable, and I think if the investor is willing to wait for the next say 12 to 18 months, then I think definitely a better risk reward could emerge. So I think he can hold on to the current quantity. He could even average a little more, but keep a time frame of at least 12 to 18 months here. My sense is that I think he's entered Sun Pharma at a very attractive price, and I think he should hold on, considering the fact that the focus of the company will be on the specialty segment, and I think Q2 numbers which are expected to come out should be quite strong. Most importantly, what is the kind of growth outlook for the specialty business, and obviously the US markets going forward is going to be very crucial. So as of now, I think he should not sell out. He should wait for the Q2 numbers. Whatever management commentary comes in would be very crucial. My sense is the commentary would continue to be positive and strong, and obviously the stock can see better returns if can be held on for the next 1 to 1.5 years. So continue to hold on, and there's no need to hurry to book profits currently at the current price. I think one should definitely hold on. I would believe that we see a target price of around 800 here. Continue to hold on. I think definitely this is definitely a good idea if one is invested for the next couple of years. A very strong retail enterprise and belonging to the Tata Group. So continue to hold on, and any tip to be used as a